Yeah, thanks.
Thank you. Sir Jon, Paul Kelso, Sky News. Just looking at your report, I note your comments about water bills rising, but looking at the report, you say you've heard evidence from the companies saying that investors simply don't believe they're getting a big enough return. So is it the case that investor returns are going to have to rise, and that's one of the reasons bill payers are going to be paying more?
So investor returns have a long and checkered history in this industry. They've been very high and they've been very low. Certainly over the period to 2023-24, they were pretty low. And for some companies, the return the investor got was less than they would have got by investing in government bonds. So there is an issue about the level of return for investors. But there's also an issue about the variability. And all the investors I talked to said, we are happy to accept a lower return. We're not looking for those high returns in water if you can give us lower risk on the downside. But if you make this industry a higher risk, higher reward industry, you'll not only have higher costs, okay, but you will also attract investors that have different business models and maybe aren't the best ones for the industry. So yes, I think looking relative to 2019, 2023, you'd expect returns to be higher. You certainly wouldn't expect to have investors losing money relative to gilts, but looking back on over previous periods, they might be lower. It's that variability and the dispersion of returns between different water companies. Some water companies have done pretty well, but others have got trapped in poor performance. So yeah, bills will have to reflect what investors need, the equity they need. That's part of the cost of building the infrastructure that we need. But at the same time, a regulator needs to continue to maintain pressure on efficiency. I just believe they can do that, not just with a modelled approach, but just with a deeper, more structural engagement with water companies.